Good morning. U.S. car wash properties, one of the most aggressively pursued CRE asset classes for 2026. So, car wash properties have quietly transformed from an operational business play into one of the most aggressively pursued commercial real estate niche asset classes heading into 2026. So, what's driving the surge? And it's not hype, but a rare alignment of tax policy, limited supply, strong unit level cash flow, and redevelopment optionality. The result is rising transaction velocity, elevated pricing, and fierce competition for assets that historically traded infrequently. Bonus depreciation has supercharged buyer demand. So, the passage of the federal One Big Beautiful Bill reinstated 100% bonus depreciation for qualifying equipment, immediately expanding the buyer pool for car wash assets. And express car wash formats with heavy concentrations of depreciable equipment will benefit disproportionately from this change. Think cost aggregation. Now, for investors, this means significant front loaded tax sheltering, improved after tax returns, but also increased willingness to accept lower going in yields. And unlike with prior tax cycles, pricing is not compressed materially. Instead, competition has intensified, particularly for stabilized express washes with modern equipment. So transaction volume accelerated in late 2025. And some industry sources estimate that US car wash transaction volume reached roughly 350 million in the second half of 2025. And alone, that was driven largely by sale and leaseback transactions, portfolio trades by expanding operators, and strategic acquisitions of legacy sites for conversion. Now, according to market participants such as Compass Commercial and SRS Real Estate, owners are not selling due to distress, but rather to capitalize on tax advantages while retaining operational control. So let's look at Los Angeles, the extreme case study. And nowhere is the trend more pronounced than Los Angeles County, where car wash sites are trading at 1,000 to 1,900 per square foot, far exceeding average pricing. Now, several structural forces are driving this premium. One is severe zoning restrictions on new car wash development and community opposition and environmental review hurdles, but also extremely high land costs. And there's heavy car dependency and a dense population pattern. So, your buyers are there. And even older hand wash facilities are commanding premium valuations when paired with redevelopment or conversion potential. So, operators, investors, and owner users are really all competing for the same slice of pie. And strategic operators such as Love Car Wash are actively acquiring legacy properties and converting them into high throughput express formats, particularly in supply constrained metros. Now, at the same time, buyer demand now includes passive net lease investors, SBA backed owner users, and redevelopment focused investors. Now, car wash sites offer income in place plus optionality, including you have a retail pad that can be redeveloped. You could add EV charging hubs. It could be converted to a quick service restaurant pretty simply. This flexibility supports valuations, even in uncertain capital markets, is the point. So, signs of maturation and why that's healthy. Now, while fundamentals remain strong, the sector is not without risk. And rapid private equity funded expansion has strained weaker operators, highlighted by Zips Car Wash filing for Chapter 11 and shedding some underperforming locations. Now, this does not signal sector weakness, it signals capital discipline returning. And what it means is strong operators with well located assets continue to attract capital, while marginal locations are being repriced or repurposed. So here's the bottom line for investors and business owners. Car wash properties heading into early 2026 sit at the intersection of durable service-based cash flow, but also highly favorable tax treatment. And there's limited new supply. And there's also strong alternative use value for redevelopment. So operational risk is rising for over-leveraged platforms, but well-located express car wash sites in supply-constrained markets remain among the most competitive CRE assets class available today. Now, for investors and owner users alike, this is no longer just a business play. It's a strategic real estate allocation. That, my friends, is it for the day. Please visit HoustonRealEstateBrokerage.com to figure out how to get a hold of me. Love to talk to you more.